Good day, my name is Christelle from Frans, the Klerk Independent Technical Analyst. Jessica wanted us to look at the Euro-Rand currency pair. And at the moment, and I think we've said it before, the Rand is caught within this double top formation. That means we can definitely expect, should this formation play out, we can expect a stronger Rand. It's building still on that right leg of the possible head and shoulder formation, but below 1893, on the Rand against the Euro, that formation will be confirmed. And at that stage, I think the 40-week moving average will be a lot closer to that neckline as well, which confirms and highlights the importance of that support. And at the moment, the 40-week moving average is waiting at 18 Rand 66. Should this full formation play out, and we can take the length of the right or the left leg, project it downwards from where the neckline will confirm the formation, and that means the Rand can go back to 1692 against the Euro should the full formation play out. Yes, it doesn't mean that it has to, but that is the possible target for that formation. And only when the Rand starts to consolidate above 20 Rand 90 again against the Euro can we assume that the weakness in the Rand will continue. It's a critical level, that 1895 level, that needs to either change into a resistance if you expect a stronger Rand, or remain a support. And keep in mind, a double top formation, should that neckline remain a support, can become a triple top formation. And it maybe take the pair back to around 20 Rand and 90. My indicator, my stochastic indicator, is sitting on a 39. It's a no man's land. It's not an ideal place to enter into a position. Wait maybe for some weakness again and then consider a short should you want to, unless you want to chase the momentum and believe that the strength in the Rand will continue against the Euro. Shashti wanted us to look at Tiffanys. Every woman likes beautiful diamonds, and Tiffanys is just a graph where you can see everybody, as soon as it dips, they buy it. And these long tails on the candles explains exactly that. As soon as there is a pullback, somebody buys diamonds and somebody buys this share. So I'm going to go back to a line graph, but before I do that, we can see that there's a window here, a gap, and that window is waiting between $103 and $103.89, 89 cents gap here that is waiting on the graph. But since it's a bit distorted, I want to move back to the line graph because then we can see a lot better picture. And we can see that should this resistance that has remained in place since about the beginning of or mid-Feb 2020, if that level of around $121.34 changes into a support, this can possibly act as a bullish flag formation that can take this share a lot higher. And a bullish flag is a continuation pattern. It tells us that this up leg that we've seen here in October last year till about mid-November last year can continue at the higher levels should that $121 level change into a support. And this break below that lower band can be seen as a false break or a whipsaw, and sometimes instrument just moves out of the almost trend line of the formation but pulls back into it again, and that's what we call a false break or a whipsaw. And interesting enough, my stochastic is in no man's land. It's sitting in a 40, not an ideal place. But if you like the brand and you like the graph, then maybe you can consider a buy opportunity here. Because should this Tiffany graph continue to support $114.85, the first target for this descending channel will be $132.50. And take note how close that 40-week moving average is to the upper band. And that highlights the importance of the resistance that needs to change into a support so that the momentum to the top can continue again. If we zoom back, we can see that the previous record high of Tiffanys is around $136.24. So there needs to happen some innovation, some mergers or acquisitions to take this share back to a lot higher levels. Mpo wanted us to look at Virgin at Australia holdings. And I looked at the Virgin Galactic holdings as well, and there might be some opportunity there as well. But nicely spotted, Mpo, beautifully oversold on my stochastic graph. My two lines have broken upwards. That confirms the positive divergence, and that tells us there's a lot of room for upside still before this share becomes overbought. And we can see that the candle of the week of the 23rd of March is a spinning candle. And that tells us indecision. It tells us the buyers and sellers were looking each other in the eye and they were not sure what to do. But the week after that, we saw almost like a type of a negative inverted hammer maybe, with the long tail at the top. But then again, this week, some optimism. And what we do note is that every week the lows are becoming a little bit higher and a little bit higher. And that tells us there are buyers in the dips, and that is seen as positive. It confirms higher lows on the lows of the candles, and that tells us a little bit of optimism. So if you want to preempt it and you don't want to wait for resistances to change into a support, you can maybe accumulate at current levels at 0.089 Australian dollars, or you can wait for that resistance at 0.09 to change into a support. And that will be confirmation of the first sign of strength. Possible stop loss that you can use as 0.05 cents, a massive stop loss. Either you can maybe make it a little bit closer and take it back to that real body of 0.072. Nice coming from a low base, higher lows on my candles, and that can maybe take the share back to that 40-week moving average, waiting at 0.14. And we can see that 40-week moving average was tested in the past, could not remain a support, and this share just plummeted to lower levels. Nice opportunity here from a technical perspective. Let's hope that those support levels remain in place. Kevin wanted us to look at JPMorgan Chase. Big bank in the US, needs no introduction. And at the moment, a lot of our financial graphs, not only on our local front, but also internationally, either have cup and handles or head and shoulder formations that might become cup and handles, or they've got these ascending triangle formations. Now, an ascending triangle formation can be a possible turnaround opportunity for a share if that upper band, and that is waiting there at $104.23, changes into a support. That can be the turnaround story for JPMorgan Chase. But if this lower band, waiting there at around, I'll give you that exact level, $99.48, if that level changes into a resistance, we can maybe confirm lower highs, and that might spark more downside on this graph. The window here was closed, but there's a nice window at the top there that can act as a possible target, and that window is waiting between $133.20 and $134.92, a gap on the graph that tells us that at some stage that gap needs to close. It can take days, months, weeks, decades, but at some stage the share has to go back and close that window, whether it's a fundamental window from a corporate action or a dividend, or whether it's an emotional window based on negative or positive news. That gap needs to close. So those are the critical levels. A $99.48 needs to remain in support. If that's too close of a stop loss level, you can maybe use the support there at $95.08, and above that $104.34, that ascending triangle will confirm a possible turnaround formation for the share. And then, of course, that red line, the 40-week moving average, once that level at $107.22 changes into a support, the long-term sentiment towards JPMorgan Chase will change to positive. 11 wanted us to look at Bitcoin. Now, I know a lot of you trade Bitcoin if we look at the questions that we receive, and we can see that there was strong support. And these two lower shadows definitely confirm that there were buyers. And two lower shadows, consecutive lower shadows on a graph implies a possible tweezer bottom. And we can see that a tweezer bottom tells us that as soon as it reached that support at $9,836, there were buyers. And that was the week in the 31st of August, and then the week of the 7th of September again. My stochastic is in no man's land. It's sitting here on a 52, not an ideal place to enter into a position. But if I extend this line, we can see that there is a possible inverse head and shoulder formation, and that is a positive formation. If the share can change these resistance levels into a support, and that is waiting there at 12,088, we can see Bitcoin a lot higher. First possible target for Bitcoin was already reached based on that right shoulder, but if I take the second conservative target of this inverse head and shoulder formation, Bitcoin can go back to 12,943. I will only be concerned about this graph again when my 40-week moving average waiting at 8,980 changes into a resistance again. Please feel free to send us your questions for next week's show. Have a fantastic week. Take care.